Phone is trying to come in, it's cutting me off. So now, what is it? You call me.
Good afternoon, and a very well welcome to all our distinguished participants that are joining us today for UTL Asset Management Limited's webinar titled Nigerian Economy and Markets, the Investor and Choices. I'm Olufunke Ayepola, the Managing Director of UTL Group, and I'm truly delighted to have you with us today. UTLAM is a wholly owned subsidiary of UTL Trustees, formerly known as Union Trustees. And at UTLAM, we're poised to empowering investors to navigate the complexities of the ever-evolving financial landscape. At today's session, we will be looking into the nuances of the Nigerian economy and markets, whilst offering insights that are not only timely, but crucial for investors. Our esteemed speaker, the chairman of UTL Asset Management Limited, Dr. Biodun Adedipe, will share valuable perspectives, ensuring that you leave this webinar with a deeper understanding of the opportunities and challenges that lie ahead. Thank you very much for investing your time with us today. So let's embark on this journey together, exploring the wealth of possibilities that our economy and markets present to savvy investors. Enjoy the webinar.
Thank you so much, ma'am, for that introduction. Thank you. Welcome, everyone, once again. Today, we'll be looking at the Nigerian economy, the markets, what are the opportunities that lie for you and I today. And like our group managing director has highlighted, they should be taken by our chairman, the chairman of UTL Asset Management Limited, and he will be looking at the current events, the current policies that has happened in the market, this year. In our economy, we've seen subsidy removal and how it has been impacting on us. We've seen inflation jumping to as high as 27.33% as of last month. We've seen interest rates also, raising. We've seen a whole lot of things happening within the economy, and how that is impacting on our lives, our daily lives, is something that we think is critical at this moment for us to gather and see how we can cushion the impact of that in our lives. And taking us on that journey is the chairman, like I noted, of UTL Asset Management Limited, Dr. Biodun Adedipe. Is an accomplished trainer in the Nigerian banking and finance industry and the non-financial organizations. He is a highly sought-after analyst and has been a commentator on government budgets and economic policies for about 30 years. In addition to a BSc in economics, where he backed in first class, he also has a PhD in economics, where he specialized in corporate finance. He has over 40 years of postgraduate work experience under his belt. He served on the Presidential Committee of Experts on the redenomination of the Naira in November 2008, as well as on a federal government committee of experts to review and advise on the persistent problem of bloated recurrent expenditure during October 2010 to March 2011. He was the Senior Special Assistant to the President on Financial Sector Development, deployed to serve in the Office of the Chief Economic Advisor to the President during March to May 2011. It is a big honor and privilege for us to have him on board here to share light on what has been happening in the Nigerian economy and the Nigerian markets, and how we can be able to navigate that and cushion the impact on our lives. Mr. Chairman, sir, you are very, very much welcome, sir.
Thank you so very much, Edgar. And let me also thank our Group MD, Mrs. Ayepola, for this platform created by our company for us to share with our clients and prospects our own peculiar understanding of the Nigerian economy and financial markets, and what we think we should be giving attention to, planning for the end of 2023 up until now, the outlook for 2024. And we are happy that you joined us today and looking forward to an interesting and engaging conversation on not just the Nigerian economy, but also taking a peep at what is happening globally, and then coming home to the financial markets and connecting most importantly to what you do at UTLAM for you and those who have the same kind of interest in the Nigerian financial market. So I put together a deck of slides, which of course will be made available to you having registered for this webinar after the event. And I'm sure also along the line, we have a goal, and as well as have the time for question and answer and comments as well. So right away, I will share my slides on the screen. Yes.
Sorry, Mr. Chairman, sir. Okay,
Yes,
so
please.
before we delve into the details of the presentation,
Yes.
we would like to take a little poll so that we'll have a feel as to the expectations of our participants on this webinar. So at this particular stage, I will want our back office to put up a poll. I will want to have a feel as to what they're expecting, the objective, the key objective for attending this webinar will be. So that poll is up now. I will want us to participate in this just briefly within a space of 5 minutes, and we'll get back to the main presentation. Sorry, our back office will present this. I don't know if this is actually up as we speak.
It's already up.
Okay. So kindly put in your major objective attending this webinar. And while we are doing that, I also want to remind us of the usual ground rules. We want to wait until the end of the presentation. Whatever question you have, please make use of the chat box and put your questions there. At the end of the presentation, we'll bring it up, and Mr. Chairman will definitely answer every question that you have there. Are we all done with this? Yeah, so this poll will end in just 30 seconds. And let's see what the result looks like. Oh, please, it flashed. Can you present it again? Sorry. Please, can you put up the result of the poll?
I think if at my end is showing on the screen.
Oh, okay, yeah. Okay, yeah, that's interesting. So we are having 73% going for to know where to invest your money as the key objective for attending this webinar. I think I belong to this class as well because I really want to make more money this period. Then we have 64% want to understand the Nigerian financial market. We have 45% opting for knowing more about the Nigerian economy. But I want to assure you definitely that whatever your objective is, I can tell you that this presentation definitely will touch on all of them, and no one will be left out. So at this point in time, I want to yield the floor to our able chairman for his presentation. Please, like I noted, keep your questions in the chat box as we proceed. Thank you so much, and enjoy your day with us.
Well, thank you so very much, Edgar. I think at this point, I will share my slides and then talk to the issues about the economy, the financial markets, and then what we see as the outlook for 2024, and then address what the attendees here indicated in the poll that just ended. So as mentioned earlier by Edgar, the title of this interaction is simply the Nigerian economy. And of course, we also there want to look at the financial markets. So the investor, that is yourself, and then the choices that we make. So that's talking about you and I in interpreting what is happening. What are those choices that we can make and also achieve our investment objectives thereby? So let me put up my video so that I can give attention more to the content of my slides. So my intention is to run through the outline indicated here, the premise, then what is happening globally, what are the major recent policy shifts and disruptions to the Nigerian economy and financial space, then what are the specifics about the Nigerian economy, then looking forward and thinking forward. So the premise. Now, there are two issues I have as the premise, which I refer to as fundamentals to our conversation this afternoon. The first is credited to this fellow called Ken Levi, who said, we all make choices, but in the end, our choices make us, which means you have the freedom of choice of managers of your fund. You also have the freedom of choice of instrument, which connects to the remarks made by our Group MD earlier and also, Edgar, choice of managers. Why would you choose UTL as an illustration here? Then, which of the instruments that UTL will present to you, why should you choose any particular one over the other? And in what situations and circumstances? The second one comes from undoubtedly the most successful investor in our own generation right now, and that is Warren Buffett, who, as at end of September this year, had a net worth of $121 billion, who made the statement that risk comes from not knowing what you are doing. And what this means essentially is that if you don't know what you are doing, you are likely to make the wrong calls. And when you make the wrong calls, ultimately, you either lose money or indeed you achieve less than your potential when it comes to investment. Now, what is happening globally in terms of the macroeconomy and social issues? And I put a byline here. What are they and what do they mean? Now, at the beginning of this year, in looking at not only the Nigerian economy, but globally, wherever you may be doing business from anywhere in the world, we identified 5 major disruptions that everyone would need to pay attention to in running their businesses and their investments. The first, of course, is the Ukraine war, which has had so many appellations, but of course, along the line, we never knew that Ukraine was that important to all of us until that war broke out February 2022, when we discovered that Ukraine was producing and supplying 24.1% of the grains we consume in the world. In which case, the war broke out, and suddenly the bread of my breakfast table became more expensive because wheat was not coming forward from Ukraine. Then, of course, the pandemic, which began in December 2019, became a pandemic in March 2020. And of course, we are still dealing with the after effects, which are still worrying anyway. Then the trigger of macroeconomic instability, which came out of the response of governments all around the world to the pandemic. Of course, this created the most worrying problem among them, and that of inflationary pressures. Now, what is even more worrisome is social divisiveness, misinformation and disinformation, which is found by social media. In which case, look around the world, different countries with their different problems and troubles. Now, what this also has meant, essentially, is that you go to, let's say, Peru. What was the problem there? The price of refined petroleum products. You go to Brazil, you can take that also along with the US, political divisiveness, okay? And again, you go to a place like France, the problem there was triggered by, raising the retirement age. So different countries with their different challenges, including Nigeria as well. The geopolitics, of course, made the complete disruptions we saw at the beginning of the year, 5 of them. Now, between August and this very moment, there have been 3 major disruptions that became clear to the rest of us. One is extreme weather caused by climate change, which is causing migrations and also security challenges. Then, similar to what happened with the Ukraine war, August this year, the Indian government made an announcement that they were placing a restriction on the export of non-basmati rice, which of course made us suddenly wake up and realize that India actually supplies 40.1% of the rice we consume in the world. Which means if you look at Nigeria, for example, every time we talk about rice importation, we think Thailand, not knowing that really India is the big number in the production and export of rice. So rice became more expensive everywhere in the world between August and now, which means increase in the price of rice is not a Nigerian phenomenon. It's a global phenomenon triggered by this policy of the Indian government. Then followed in October, 6 new members admitted into BRICS, which will become formalized January 2024. And the argument there is that if these countries come together, 10 of them now, looking at their GDP, that represents the size of their economy, if we add it all up, it's a very significant figure, looking at close to 50% of the global economy. If that happens, and all these countries decide to now deal with each other, that is trade with each other, in their own currencies, excluding US dollar, is that possibly a signal of a weakening of the US dollar hegemony in international transactions? That become a question. Of course, lately, the Israel-Hamas war, worrying for Middle East, and of course, possibly for alignment across, geopolitical lines. And then, of course, across the geographies. Now, if we look at all of this, what they also point to is the worry about the Chinese economy, which has been the driver of the global economy in terms of growth in the last 45 years. Now, with Chinese economy slowing down this year, the worry is that the global economy also will follow suit. So at the beginning of the year, the projection was that China would grow its economy by about 6% this year, at some point reduced to 5.5%. And then the argument now became, hey, if China's economy contracts, then the demand for hydrocarbons, which is a major issue for Nigeria, will also be a major challenge. So if you look at the international oil market as of today, in fact, the last 3 months, that market has been responding to any story coming out of China. Anytime the message comes that, oh, China's economy seems to be stabilizing because of government's response, therefore, the global economy will also gain some traction. The markets, stock markets around the world will pick up. But when there's any news that points to China run into trouble, for example, talking about deflation right now, inflation rate in China, latest data, is 0.0%. So the worry is that it may turn negative, which we refer to in economics as deflation. So if that happens, then it means consumption will contract in China, and that will, of course, ultimately also affect manufacturing, because they will have to slow down in what they produce. And the second most populated country in the world now, no longer first. India overtook China in terms of population June this year. Okay, so what is means in essence then is that if China slows down, then the consumption and demand for hydrocarbons will also reduce. So that immediately shows in the oil markets and prices. So now, let's come back home. We are all part of this system where between May 29, when President Tinubu was sworn into office, and now there have been major policy shifts and, of course, causing disruptions. Okay, one of them is implementation of first subsidy removal. The second is unified exchange rates, which is the one almost every Nigerian talks about every day. Of course, fiscal consolidation, improved business environment promised, and of course, banning of 43 items excluded from the official FX market. Now, all of this, in terms of implications, which you and I have experienced, massive depreciation of the Naira, that's the Naira exchange value, and of course, uptick in inflation rate, increase in transport fares, increased cost of living, increased cost of doing business, including massive exchange losses for companies that had adverse position before that announcement was made, agitation also for wage and pension increase, and need for priority and strategy research, which is the essence of this webinar that Youth Lab is putting on this platform. So let's now come back home to the Nigerian macro economy. What are the big issues? Now, I decided to put this on a dashboard. And that dashboard picks on some key elements anytime we are discussing the Nigerian economy. The first is the growth rate of our economy. Is the economy growing? Is it expanding? At what rate is it expanding? First quarter of this year, it grew by 2.31%. second half 2.51%. If you do a straight line average for the first half year, that will give you 2.41%. Question now is second half of the year, what is likely to happen? Of course, that can also be refined by the time we get to Friday of this week, where we expect the data for third quarter to be released by National Bureau of Statistics. Now, if we see the growth rate during the third quarter of this year, we can now form an opinion as to where this economy will go by the end of this year. But by all means, all expectations point at a growth rate less than 3% for 2023. Oil production is also key to Nigeria, and the reason is very straightforward. If you look at our merchandise export between January and June this year, based on the official data, available latest data, you find that our exports, merchandise export, that 90.1% of that was actually hydrocarbons, which are three categories: crude oil, condensate, and associated gas. But in the last 7 months, that figure has been inching upwards little by little. Latest reported for October was at 1.42 million barrels per day, which is a significant improvement compared to April 2023. So that is good news in a way. But it can also be a real challenge on the other hand, because going along with that, with what is happening globally, the price of crude oil has also gone up. At some point, people were projecting it could touch $100 per barrel and go beyond. Ordinarily, that should be good news for Nigeria, but unfortunately it is not, because refined petroleum product that we consume 100% is imported. Because what we produce locally is almost insignificant compared to what we consume. So now, if you take that back now to the removal of first subsidy, the basic question is this: the major drivers of the price you and I pay at the pump head in every petrol station, let me use that word, is determined by two major variables. One is the cost of the imported refined products, and two, the exchange rate. And that means, insofar as those two are not favorable, price of oil is increasing internationally. That means the price of refined products also will go up. Logistics, that is the cost of bringing the products to Nigeria. When you add all of that and distribution cost locally, it means that when the price goes up internationally, it will also become more expensive consuming refined products that are imported. But at the same time, if the exchange value of the naira is weakening, that means you put out more naira for a single unit of the dollar. That also will escalate the cost. So which means that when the government removed the subsidy, obviously, that ordinarily made us to pay more for refined products. But between then and now, naira had lost value in the alternative market from the official. Every official market also has moved significantly from where it was when the policy was pronounced and today. In which case, we have to actually pay more. And if we are not paying more today, that means somewhere along the line, the government is intervening to ensure we don't incur even more cost in the light of this policy environment we run. Then external reserves. Now, the key thing about external reserves is similar to the surplus that you have. You made income, you incurred expenses. When you put them side by side, you actually find that you made more income or revenue than the cost of making that money. So you have some surplus. Now, that surplus goes either as saving or investment for an individual or for a corporate entity. But for a country, it is about you are trading with the rest of the world. You are selling things to them, whether tangibles as in commodities or services as intangibles. Now, they pay you for what you sell to them. At the same time, you also buy from them. So the interaction of those two, which is in your trade figures, now we produce a certain figure that we call your trade balance. Now, after your trade balance, we now look at your non-trade activities. That means services and the rest of them, borrowings, repayments, all of those. And then we come up with your balance of payments position, which means did we buy more from the rest of the world, or we actually sold more to them? If we sold more, then there's a surplus that now we start putting together. It is the accumulated surplus over time for the country we refer to as your external reserve. Now, as of 16th of November, it was $33.312 billion. About $2 billion of that is blocked, and about $31 billion was, unencumbered, free. But the challenge there is that apart from this figure being at this level, there's also the concern about some obligations that Nigeria has to external stakeholders. Some of them, like two of the banks, Goldman Sachs, as well as JP Morgan. Now, the former management of Central Bank borrowed money from them and used that portion of external reserves as cash collateral. So that means that portion is not available to start with. And that's about I think about $6.5 billion or so. The figure is somewhere in one of my slides here. Then the second part were forward transactions that the CBN also did with the banks. The banks now, on behalf of their customers variously. Now, the idea of a forward transaction simply is this. I need FX, I want to buy from you, but I won't need the FX today. I need it in future. 90 days time, 180 days time, it could be 365 in a year's time. So that is what we describe as a forward contract. Now, when I do a forward contract, it means I agree the rate with you today. I agree the volume I want to buy. They will deliver to me on a future day. So those future days variously across various transactions. The date came, we call them maturity date, but the former management of CBN did not extinguish those matured obligations. And then we now say, okay, what kind of figure are we looking at there? We're talking of anything between 6.7 and $7.2 billion. So the new management of CBN now said, we are in now. Let's thoroughly investigate what these are. Are they genuine transactions or transactions born out of crony capitalism? Now, crony capitalism means, the GMD of, just for illustration, GMD of UTL, all right, is appointed as finance minister. And because we are related family members in UTL, all right, and I say now, as the finance minister, what can you do to be of benefit to me? And then she looks at the policies, the programs, projects of the government, and sees a window where she can do something to put money in my pocket. Now, when she does that, we call it crony capitalism. And that happens all over the world anyway. It's not peculiar to Nigeria. So that, again, is part of what the CBN management now is trying to determine. What portion of forward contracts are truly matured and genuine? What portion are matured and we are not sure that they are genuine? So, but long and short of it, when you determine how much is truly available, we then go back to the trade data I mentioned earlier on. Remember I said between January and June this year, 90.1% of Nigeria's exports was hydrocarbons. So we'll be making money from export of those items. So the question now is, we also have been importing. So based on the trade data from January to June, we should get the figure for July to September tomorrow. MBS is going to publish that tomorrow. Now, but for January to June, if we divide the import bills that we ranked up as a nation between January and June this year by the official exchange rate, we get $2.486 billion. That means that is how much Nigeria spends on a monthly basis paying for imports. The Naira value is 1.88 trillion Naira every month, okay? We then take that figure and divide it into our external reserve, the liquid portion. That will give us a number of months. So what we look at then is how many months can our reserves cover if we compare that with our import bills as a nation. Minimum recommended for you to have stable exchange rate is 6 months. But as we talk now, the latest check I did, which was yesterday, was 8.25 months, which means we have more than minimum cover required. But we then talk about a few other things later. Exchange rates, vis-a-vis the official market and the parallel market. The difference between them is referred to as premium. When I checked these figures out yesterday, I found that the difference between them is 37.02%, far, far higher than the maximum of 5% recommended. Whenever it is higher than 5%, it is always interpreted as an incentive for round tripping. So IMF recipe, I would say, will always be that, look, you have to correct this by raising the official exchange rate to close the gap with the parallel market rate, which of course was what the president, indicated by the unified exchange rate policy he announced. So in which case, if that premium remains that high, there is a possibility that the CBN might still move the needle of exchange rate. But later, when I come to summarize, I will tell you the things we look at that make us not to expect them to move the needle upwards. Then monetary policy rate is the rate at which central bank lends to commercial banks, the MPR. At the present moment, it is 18.75%. Now, will this rate go up? There is an indication that it may go up because inflation rates, like Edgar said earlier, at 27.33% as at October, means we are running a regime in Nigeria of negative interest rate because inflation rate is greater than MPR. So in which case, there's the likelihood that central bank will want to increase the monetary policy rate. And of course, the question again is, will they possibly increase it, knowing the implications for manufacturing and for the growth of the GDP? Now, the stock market has been an interesting segment of the financial market, where the market has been growing strongly, especially since President Tinubu came into office. All right? It's an interesting thing. I will show you a table shortly that shows how that market has been growing. Again, we'll talk about that later in terms of whether this trend will continue or if it will stop. Is it likely to be soon? We talk to that issue as well. So in the remaining slides here, like I said, there's a lot of data and information that when you get your copy of this, you can go through them because you now see a lot of the things I said, earlier on. Now, I will move on to, now this is the table I promised to show you. What has happened to the stock market between end of May and last week, Friday, 17th of November. Okay, what was the growth, or let me say, if you call it increase in the index from December 31st, 2022, up until the dates indicated here? If you take the index, it has gone up by 13.75% as of last Friday. That represents also the year-to-date return. That is to say, if we have a portfolio of investments and you're able to compute the weighted average return of that portfolio, if it is greater than this year-to-date return of the Nigerian stock market, then we say your portfolio outperformed the market. Then if it is less, then the market outperformed your portfolio. So the question there would be, what kind of advice do you expect from UTL? And if you follow the advice, where are you likely to be in terms of the return on your investment? Now, for anyone investing or doing business in Nigeria, these are the challenges and risks in the environment, which are inevitable, inescapable. And that is to say that the challenges range from macroeconomy, interest rate double-digit, exchange rate volatile, inflation rate double-digit, unemployment rate double-digit until Nigerian Bureau of Statistics adopted a new framework represented by the National Labour Organization that brought it down from the 3% to 4.1%. Deepening poverty, not in the common and general sense of referring to it, but as an investor and also a business person. What you do is look at the value of Naira in the hand of the person you want to sell to. What is happening to that value, especially with inflation rate and the way the Naira also has gone unstable. Insecurity is still a challenge. Consumer behavior, of course, contracting wallet, employee restlessness, and of course, technology disruption, cybersecurity concerns, migration from Internet of Things to Internet of Behavior, blockchain technology, the problem with hackers that we all see and some of us experience from time to time. Now, all of this together, how do we look forward and also think forward? Which means, what should we expect? And in light of those expectations, what should we do? Which is the key issue we are looking at this webinar. Now, I put this particular slide to remind people that infrastructure is improving in Nigeria, okay? And these are just examples of hard infrastructure that have improved in Nigeria in the last 10 to 15 years. So that is just to point to the fact that the environment for doing business is improving gradually. Now, I've mentioned earlier that different entities also form opinions about where the global economy is going, and they also look at that vis-a-vis specific regions and economies. So what I have here on this slide is a summary of the October 2023 outlook done by International Monetary Fund, IMF, where they expect that this year, the global economy will grow by 3%, then next year 2.9%, a little dampening. Advanced economies will do 1.5%, which of course is slower than what they achieved in 2022, but slower a little bit more in 2024. Emerging markets and developing economies will grow at 4% this year, do the same in 2024. Sub-Saharan Africa, where Nigeria belongs, will grow at 3.3% this year and do 4.0% next year, improvement. Now, the expectation that Nigeria will grow at 2.9%, dampening from 3.3% last year, but that they expect that to again pick up in 2024. South Africa is weaker, growing at less than 1% this year, and of course to do 1.8% in 2024. That is the general picture, okay? But for us ourselves who are looking at this economy, and based on what we know because we operate within this economy and financial markets, what are the things that we believe will drive growth of the Nigerian economy and help us also to form opinions as to where major variables that will help our decision makers as investors, to play out. First is to recognize that our population is large. We are number 6 in the world in terms of size, about 225 million people estimated, and that is talking about United Nations data, which we have for every country around the world. So we are number 6 in that. But our population is also youthful, okay? Which means if you look at the structure, it is pyramidal in nature. That is, the base is wide and big, and it tapers to the top or apex, if you like. So, but not only that, our population is also growing rapidly. But one of the major attractions, and that is why investors are looking more at Nigeria than many other places. And some of us do wonder at times. But the reason we don't wonder is because of these facts that we have on this slide. Now, until June this year, China had the largest population in the world. As I said earlier, India overtook China in terms of size. So they are the most populated country in the world today. There is something playing out there was the age of the population. The Chinese population is aging, and that's part of the concerns for China driving growth globally. So now, median age in China is 38 years. Median age in India is 28 years. So India now, many more in terms of number than China, the younger population. But when you come down to Nigeria, we are number 6, no doubt, in terms of size, but our median age is 17.2 years. So that is the attraction to everyone. In the sense that it's a good environment to invest, because when the population is young, there are only 2 things required to turn it into a massive market. One is education, the other one is health. Now, if you are able to get those 2 right in Nigeria, we grow a population that in a matter of 3 to 5 years, the middle class will expand. And when that expands, you have people that consume. And because they consume, they create opportunities for investors to get good returns from their investment. Number 2 here, rapid urbanization. As at 2023 June, 53.96% of our population now resided in the urban areas, up from 47.84% in 2015. That also is an attraction for investment. Deep internet penetration. Nigeria is one of the top 10 in the world in that regard. Teledensity, of course, we are ranked 11th in the world in terms of what we call netizens. Netizens means Nigerians that have access to the internet. We are ranked number 11 in the world in that regard. Now, coming to exchange rate, which I believe everyone here will be interested in. Where do we expect it to go? Now, there are 2 things we combine here. One is we have the budget assumption, which is coming from government. The second is also coming from the government, and that is what we call significant utterances of key government functionaries. So the finance minister made a remark recently and said, where the government expects the naira exchange value to the dollar to settle in 2024 is anywhere between 650 and 750. So it was easy for us to place the assumption in the budget for next year is still a bill at 700. That falls within that band. The JP Morgan issued also their own outlook for Nigeria, and they are the projected 850 naira to the dollar. There are several others that have done a similar thing. So now, the question is, where do we expect the naira to go next year? Is it going to stay within this band, and why would it be so? So those are the things I will talk to in my conclusion shortly. Then, of course, interest rate. I've mentioned NPR before, relative to the inflationary, inflation rates at 26 point, now 27.33%. Now, differential between those two, vis-a-vis interest rate differentials between the dollar and the naira, shows clearly that there is a pointer that either the naira will lose value or the central bank will raise monetary policy rate. It's a choice between those two. So now, inflation rate, why do we expect it to remain high and not come down any significantly? Money supply is growing gradually to where it was before demonetization that Emefiele's management did at the central bank. Demonetization is withdrawal of currency from circulation with a promise to replace them with new naira. But sufficient new naira was not printed and delivered. So in a cash-driven economy, that became a constraint on economic activities. Whereas at last week Friday, money supply, that is money outside of the central bank, that is within the bank's vaults and in the populace, in your hand and in my hand, had grown to about 3 trillion naira. Before demonetization that Emefiele did about this time last year, it was 3.28 trillion naira. So which means we're now having more money in circulation to match the value of economic activities taking place in Nigeria. But if that continues, and we also continue to import most of what we consume, the likelihood is that inflation rate may not subside. So let me now conclude this way. What do we expect in terms of the rate of inflation this year? The rate of growth of the economy this year. Like I said earlier on in the data, the table I showed you, IMF expects 2.9, and of course, World Bank expects 2.9. BA Consult, we expect 2.72% this year. Maybe when we get the data for GDP for third quarter on Friday, we do a review of this. We expect inflation rate to remain double digit, most likely still above 20% for the first half of next year. If it will go below 20, maybe the second half of 2024. But don't expect single-digit inflation rate in 2024. There's no magic that can bring that to happen, given the usual pattern with inflation rates. Okay? Now, exchange value of the naira. We expect that it will stabilize. Now, when we say stabilize, it's different than it gaining strength. To stabilize means the kind of volatility we saw after the announcement, which of course occurred because of speculative attacks that brought the naira to where it is. We are likely to see that subside toward the end of the year, and of course, latest by the first quarter of next year. So we expect the naira to become stable, at least within the first half of next year, probably begin to gain value by the second half, because what the government is doing now variously is rekindling investors' confidence, and we likely see, a resumption of capital inflows into Nigeria towards the end of the first quarter of next year and the second quarter. So by the second half of next year, we see that now impacting the exchange value of the naira. Of course, utilization is a major issue for every house like UTL and also for every investor. Bank lending rate will remain double digits. That's what we expect, because there's a likelihood that central bank will adjust the NPR. But that may not happen immediately because the MPC meeting that was to hold yesterday was postponed for the second time. And that's the platform where central bank decides what to do with the NPR, whether to raise it or reduce it. So in closing, before we take our Q&A, as an investor, if you are risk averse in turbulent times, you will likely grow below your potential. In which case, it is not being risk averse in turbulent times that matters, but being guided by those who understand the markets and can give you quality investment advice, and that is what UTL stands for. So 3 questions that you should always ask. What has changed, which I've talked about in my presentation? What is likely to change, which is intelligence? I've also talked about that in the outlook. Then what choices can we make? Like I have at the beginning, the choice of which manager of funds, and that puts UTL before your faces today. Then which instrument? UTL will now guide you into which instrument is best in terms of one, your own risk, attitude, and then the other one is the performance of those instruments in the market. So in conclusion, generally, our behavior produces the outcome we see. So it starts from what we say about Nigeria. So if we say positive things about Nigeria, that will not only make us also see the positives rather than negatives, but equally resonate well with foreign investors who now begin to take what we say as a pointer that Nigeria today is a better investment environment than it was 2-3 years ago or even a year ago. And of course, part of that is buying what is made in Nigeria. And like we also advocate to the government, there's a need to de-dollarize the economy. So essentially, so let me stop sharing here, and then we can use the rest of our time for engagement. Thank you so very much. And God bless you all.
Wow. Thank you so very much, sir. Thank you so very much. This is quite deep and very comprehensive. Well, I didn't expect any less because I know who we have as our board chairman, and I will have even requested for a certificate of participation because this is more than more than a full course for somebody to have certificate. Now, I think we are moving on to the next stage, which is questions and answer. Are there questions? Are there questions? Let me check.
Yeah, I think there are 2 in the queue at the box.
Okay, let me get okay. All right, so let me read this. Does Nigeria have the fundamentals to achieve, and I'm sure it's FX rate of 700 to $1? The expectation of the proponents of the exchange rate unification was that the unification could be achieved at 600 to $1. How did we miss this? Was it due to wrong timing or poor implementation that led to the loss of control?
Yeah.
I think Chairman, you want to take this one before we proceed?
I think we can take them in batches because that saves time, and we can get a lot more done.
Okay, so the next question here says, the CBN has again postponed the MPC for the second time.
Yes.
The meeting that is expected to address the key policy decision like MPR, especially with a surging inflation. Considering this meeting is statutory, it has kept analysts and players guessing on CBN's next move. What do you think are the overall impact of this postponement on the economy? And the next question, the next question here says, thank you for the informative slideshow. Do you believe the NGX will allow trading of stocks with margins the way that it is done in the New York stock market? Okay. I think these are the 3 questions that we have. I think we
probably we can take these ones to start.
This one until we receive more.
Yeah. Okay, I'm sure others will follow once I respond to this too. Thank you very much, Edgar. Now, I will take them in the order the questions came. The first talks about the targets of 600 naira to the dollar, exchange rate, promise that unification of exchange rates, policy pronounced by Mr. President. And the question says, did we miss that target because of timing and poor implementation? Now, the issue here is that anytime a country is in currency crisis, it is always open to what you call speculative attack. And speculative attack also comes from 2 major perspectives. One is the supply end, then the other one is the sustainability Okay, so for those who now came to speculate that the CBN doesn't have a deep pocket enough to sustain supply in the market and keep the exchange value of the naira at 600 naira. So that, of course, created that impression from players in the market that whether we like it or not, the parallel market rate will distance itself again from that new rate adopted in closing the gap. And that if that happens, then we find premium again going up. Premium was about 62% before that announcement by President Tinubu, about 62%. Now, when it was closed, it came down to about 12, 13, 14%. But gradually it started moving again. And it is natural when your economy is largely import dependent. Of course, people do argue that, oh, even, I mean, this argument that Nigeria is import dependent, that it doesn't fly because our import per capita, our import vis-a-vis GDP is very low compared to some other countries, even some in Africa, Morocco, Kenya, and so on and so forth. So, but the reality, okay, is that in Nigeria today, there is a question mark on supply of FX. So and that brought speculative attacks as it happens across the world. So that made it inevitable that if the rate is driven by the market, as that policy pronounced, certainly the rate and the official window will need to constantly be adjusted. That's what brought us to where we are now. So I won't call it a problem with timing. Neither will I put it to poor implementation. I think for me, it is the policy itself is defective. That's my position as an economist. And why would I say defective? Because if you take into account the fundamentals of our economy on the one hand, and then the history of this kind of policy, it shows clearly that what we are seeing today is an inevitable outcome. We did that way back in 1986, September. We did it also in March 1993. We did it in June 2016. And now we did the same thing again, okay, June, July 2023. The same result, essentially, because when you don't have sufficient supply for the market, the parallel market will always be a moving target. And that's what we see here. So it's not something you try with a defective economic structure that we have currently. So that target is not an issue for me. The issue is the policy itself. And I'm happy about the president we have now because he has demonstrated some things that often are missing. Yes, if we tag it to be a mistake, but we've seen occasions where the president will step in and say, oh, this particular issue, I have a feedback, this is how it is impacting Nigerians, therefore we are not going that route. At least I can count 3 different times he has done that with respect to some things. Maybe along the line, as we advocate on this, if we get that feedback and they do something about it. For the second thing, postponed our MPC, clearly I agree with you 100% that is a wrong signal we are passing to investors, whether domestic or international. Because the MPC, yes, statutorily is supposed to meet minimum 4 times in a year. That's minimum, okay? And when it is supposed to meet, that would be itself a signal to the market. So because we form opinions and expectations, oh, this is the way MPC will react to all these issues we discussed today. But when the meeting doesn't hold, it means there will be no change in the reserve requirements as well as the policy rate, as we call it. So people therefore cannot plan. We still remain the mode of expectations and projections. That is not good for the market. Then the third one of margin trading, don't forget, margin trading, I think for now the regulators may not, give an approval for that. If you go back in history, that was one of the problems we had during the global financial crisis, but peculiar to Nigeria. Okay. Now, Nigeria, we have very fantastic policies. We have extant laws for the financial markets in place, fantastic laws, but the problem is always implementation. So people take advantage of what at times we call strange opportunities in the market, and they now exploit that. So when they do, what turns out is that a policy put in place that should help the market to grow, help investors to make money, and through that also help the economy to grow. is now abused and, of course, bastardized. That, in my view, is why we do not see the regulators go in a hurry to allow margin trading in Nigeria. That's my opinion anyway. Thank you very much. We can take more questions.
Thank you so much, sir. Thank you so much, sir. That's quite deep. Any other question? Kindly drop your question on the question and answer box. While we are waiting for any other questions, sir, I'm just wondering, with the current high interest rate that we're experiencing in our economy, how will that impact on manufacturing and our GDP, the whole GDP going forward? Do you think is something that our GDP will remain resilient, or the interest rate is actually definitely going to pull it back as it is?
Thank you so very much. That's a very, very good question, and I will respond to that this week. Now, in my own opinion, and this has been my argument for years, high interest rates are counterproductive to manufacturing, because whichever way you look at it, it means that with high rate of inflation and, of course, high interest rates, that will have a direct impact on the cost of production. Once the cost of production increases, by all means also, you are likely to see output shrink, because cost may begin to outweigh revenue for some manufacturers, and that will lead to two kinds of retrenchment, as we call it. Now, the two kinds of retrenchment we talk about are, one, retrenchment of production lines, which case, if it's a diversified manufacturing entity, you now find that the cost of production of a particular item has gone higher than the revenue, and there's no other line from which you can get revenue to sustain it in operation. Then you shut down that particular line. We call that line retrenchment in manufacturing. It can also result in staff retrenchment, in which case jobs are lost, and of course, invariably, as manufacturing output shrinks, ultimately GDP will also shrink. So in which case, high interest rates is counterproductive, to manufacturing, and also when you trace it, what we call, you trace it through, okay, it will also adversely affect the GDP. And that is the way it works. So that's why some of us have advocated that the interplay between interest rates and output does not recommend that central banks should continue to raise MPR. But of course, if they look at the side of investment, they also will now consider that if MPR is high, then all the instruments whose returns are tied to the IPR will also have their rates go up and therefore become attractive to investors. So it's actually a very tough one, a tough balancing among the four major macroeconomic objectives of economic managers. That is, you want moderate inflation rate, you want output to grow, you want also to have an increase, a surplus in your balance of payment. We call it viable balance of payment. And of course, we want to also develop. That means make the economy grow inclusively, grow the economy, and also create jobs. It's always a very tough balance. And you have to make a choice because there's a trade-off. That's the way it works. Thank you very much.
Thank you so much, sir. Thank you so much, sir. I have this question. Say, what asset classes should Nigerian investors focus on in 2024? Will equities continue their upward trajectory, or will there be a rotation into T-bills and other fixed income instruments?
Okay,
that's one. There is another one here.
Okay. Right.
Okay, I should take the second one, sir, so that you
take it. I will write it down here.
Okay. Okay, sir. So the second one says, with the devaluation, why are the stock prices not adjusting to reflect the current value of the naira? As it is, one can say that all stocks in Nigerian Stock Exchange are undervalued, yet there is lack of capacity to attract foreign investors. What are your projections with respect to return of foreign investors?
Okay. Very fantastic question. So let me take the first one. Now, with respect to the equities market. Now, what I will do is to still give an uptick between now and the year end for equity prices. And why will I say I expect it to continue to rise? It is very simple. It relates to the question I answered earlier on. Where do we expect MPR to go? You know, one of the questions said, what do we think about the postponement of the meeting of the Monetary Policy Committee of the Central Bank? And we said, with that happening, the Central Bank will not adjust the monetary policy rate, the MPR. So if CBN doesn't adjust that, that means that rate will remain a status quo. The way it plays out usually is that there's a trade-off between the stock market and the money market, which means when you look at instruments in the two markets, anytime instruments in the money market are attractive because they attract high interest rates, typically investors migrate from the capital market to the money market, all right? But whenever rates in the money market come down, then investors migrate to the stock market. So that is a phenomenon in what we are seeing currently, okay? Because most money market instruments, of course, their rates are very low. So and for that reason, you find that most investors migrated to the stock market. And as we know, with stock prices, the way they run is the interplay between demand and supply. Once a stock is on call, that will make its price to go up. But when a stock is put on, let me use the technical language now, is on put, that means more people want to sell that particular stock. So its price naturally will also go down, okay? So once more investors shift to the stock market, more liquidity comes there, and that helps stock prices to also go up. And especially the ones we refer to as siren stocks. Siren stocks are those stocks that everybody knows about and is interested in. Okay, they usually give value significantly. So now, given that, if the MPR doesn't change because no MPC meeting is holding, that means we likely see the status quo at least between now and the end of the year, and possibly into beginning of next year. Because ordinarily, this was supposed to be the last meeting of MPC for the year. Unless the CBN governor now convenes a meeting. When even convening the meeting, look at the way it will play out. And that's the way I interpret it. That it is either he's still wondering whether to go ahead with the inherited committee members or wait until they reconstitute the committee itself. But the way it looks to us is that at least 5 members are assured. That's the Committee of Governors of the Central Bank. With the governor, they are assured members of the committee, which is only maybe 3 or so members that are from outside of the Central Bank that we're talking about here. So if that is the case, then we don't expect any change or switch between the money market and the capital market. And if that's the case, then we expect prices to continue in the pattern there. That is, the market will remain in uptick between now and the end of the year. Now, the other side to it, which is talking about physical securities, I think, in my own view, that they will remain as they are in the market, given that situation of, you know, a stable and unchanging MPR. That's my interpretation of that. So I think that's my response to that particular question. Thank you very much. Now, the second one is, why are stock prices not adjusting to the exchange value of the Naira? Now, and why is it not attracting foreign investors? Because that's the natural expectation. That if stocks become penny stocks because of the exchange value of the Naira, that ordinarily should make the market interesting to foreign investors. Come with a few dollars, you buy stocks of so many, because the value in dollar terms is very, very low. That's what you expect. But then comes the issue of confidence I mentioned earlier. Foreign investors will come into the market when they have confidence about bringing in their money and taking it out. If I'm not sure I can readily take out my money, if I invest it here, I won't come. And that is why we are advocating that the CBN and the government should work very hard on boosting investor confidence, letting them know that if you invest in Nigeria, you'll be able at maturity or when you choose to take your money out of Nigeria, which is the message President Tinubu has been passing everywhere he went so far around the world. And of course, that's what CBN governor has also assured, especially by paying the matured obligations or forward contracts to Stanbic, to Standard Chartered, and all the foreign, big players in the banking industry in Nigeria. So no matter how attractive our stocks are to foreign investors because of the value of the naira, they will not come until they are sure that liquidity management will allow them to take out their money when their investments mature, or even take out the return on their investments. So that is the basic thing here, in my own opinion. Thank you.
Thank you so much, sir. Thank you so much, sir. I am seeing somebody here that wants to join the speculators on our naira. The question is, what is the best? What is the best investment venture for individuals with 5 million to 10 million? Is it wise to invest in foreign currency like dollar? This is another speculator that I want to push the foreign market.
Well, I will say investing in that now is risky. Risky in the sense that it depends again on the instrument anyway. Because if it's in the direction of speculation, buy dollars to hold down and sell later when dollars lost value, that is highly risky. Because the direction government is going and all the things they are doing. And let me also mention this. Even some banks in Nigeria are aggressively promoting export. I mean, I intervened in that for First Bank and Citibank 2 weeks ago, precisely 2 weeks ago on Tuesday. So those banks are now seriously and aggressively promoting export. So if all of this come together with what government itself is doing, there's a likelihood that we see an uptick in dollar inflows into the Nigerian economy outside of the sale of hydrocarbons. And if that happens, then a speculator who wants to buy dollars as a hedge, either against inflation or against the diminishing value of the naira, may have the fingers burnt. But if it is to invest in instruments, of course, we get UTL give you advice in that regard. Even at that, if you're investing in Eurobonds, you want to be careful. Eurobond of which country? I mean, a whole lot that UTL management will tell you in this regard that we have seen around the world. But of course, again, if you have naira to invest, why not FGN savings bonds, which was reported just yesterday evening by Bloomberg as attractive, the sense that coming at 13.46%, return, that bond price is quite attractive to investors. And of course, Bloomberg interpreted that to mean that, Nigeria is trying to, of course, generate interest in those instruments to boost liquidity, within government coffers, but also encourage investors to put money in bonds. So, but like I said, I mean, that's what the management team of UTL is there for. So when you contact them, they will give you a professional advice on the best thing to do in the situation we are. But that's the macro perspective that I just shared with you. Thank you very much.
Thank you so very much, sir. Thank you so much. We appreciate this. Okay, so still related to investment, just in simple terms, I believe there are people here that will be wondering the main difference between bonds and treasury bills. So would you want to throw more light on the difference between bonds and treasury bills for those that want to understand, and possibly for somebody who has some short-term funds they want to invest for a period of maybe maximum of 364 days, which of them will you recommend for them to position in and buy?
All right. Thank you very much. Very good question too. Now, both bonds and treasury bills are short-term debt instruments. That is, they are used by government, both are used by governments to borrow money from the investing public. But bonds also are used by private companies to borrow money from the investing public. So when it comes to bonds, therefore, we talk about private and public bonds on the one hand. Now, both of them, therefore, serve the same purpose. They are borrowing instruments. So the entity issuing them uses them to borrow money from the investing public. But where now there's a difference between them is this. Number one, for bonds, when you invest in bonds, you receive your return twice in a year. Okay? We refer to that return as coupon. So coupon has a rate. We receive that twice in a year, which means when you invest in a bond, which typically is of longer tenure than treasury bills. Okay? Some bonds can run up to 25 years. We've once, in the early years of Nigeria, issued 30-year federal government bond. Okay? So the tenure can be that long. But of course, we don't have that presently in Nigeria. So the bonds by nature are long-term in nature. Okay? The other thing you need to know about bonds, apart from paying, the coupon twice in a year, is the fact that when you invest in a bond, okay, the way it works is that the issuer will also have a sinking fund into which it will transfer funds on a regular basis so that whenever the bond matures, you can get your money back without any storage. For that is the role that UTL plays within that market, because UTL provides trust management, services within that space, which case we assure based on the structure and also by the regulators that the fund you make available, that the issuer is putting an arrangement and structure in place to be able to pay you when the bond matures. No stories. Okay. Now, when it comes to treasury bills, they are shorter in tenure, ranging from the primary issues from 91 days to 364 days. All right, that's for treasury bills. Which case, if you have money, you can put it away for 91 days, you can put it away for 180 days or 181. You can also put it away for 364. All right. Now, apart from the primary market, there's also secondary market for bonds and also for treasury bills. In which case, for treasury bills, maybe I bought a 91-day bill, and then after 20 days, I'm in need of cash. The nature of treasury bill permits me to rediscount it. That means I can take it back to the issuer. Treasury bills are issued by the central bank on behalf of the federal government. That's why we say it's a short-term debt instrument issued by central bank on behalf of the federal government, which also means that treasury bills are not issued by sub-national government. All right? So I can return it before maturity if I'm in dire need of cash. In central banking language, we say you are discounting it. So if it has elapsed 20 days already, and it's a 91-day bill, that means there are 71 days to go for that particular bill. So central bank can now bring it back into a secondary market, where they refer to it as open market operations. So that is where bills that are bought and sold, that is traded, are of tenure less than what you see in primary bills of 91, 182, 364 days. Okay? So both markets are open to investors. But of course, today, the retail end of treasury bills is closed in a way, because minimum that central bank now allows is 50 million naira. If you want to invest in treasury bills, it is why, an organization like UTL can now create a product where you can invest money with UTL, and UTL will now aggregate the various investments of those retail investors, like what we say collective investment scheme, and now invest in treasury bills. In which case, you create a product on the back of treasury bills, which means you're investing in treasury bills, but because you don't have up to 50 million, you can't do that directly. But you can do it through UTL. Okay? That's the way it works with treasury bills. But of course, treasury bills again pays interest upfront. That's another difference between treasury bills and bonds. Bonds, remember I said, pays interest, call it coupon, twice in a year. Usually the beginning of July, representing the coupon you earn from January to June. And then the beginning of January, representing the coupon you earn between July and December. That's the typical pattern, the structure. All right? But for treasury bills, it pays interest upfront. What does that mean? If, let's say, for the sake of discussion, the face value of the treasury bill you want to buy is 1 million naira, and let's say the interest is 10%, okay? Now, 10% will be 100,000. But if it's a 91-day bill, which is like a quarter of a year, then the interest applicable will be 100,000 divided by 4, which is 25,000. So to now buy 1 million worth of treasury bills, what we pay as cash will be 1 million face value less than the 25,000 interest. In which case you pay 975,000. That will be the selling price of a 1 million naira face value treasury bill. That's the way it works. Okay. So you put down cash less than the face value of the treasury bill you are buying. That's the way it works, but it is very liquid. Happily also today, bonds are traded, which is unlike some years ago, before we created that market, bonds were like you buy and hold unto maturity. But now bonds can also, be traded. So, but those are the essential differences between them. And both of them are also good instruments to invest in, depending on how long you want to invest for. In which case, how long can you part with this money without needing it immediately? So that is a basic consideration in that regard. But both of them are issued by governments, and then bonds are also issued by private companies and entities. Thank you.
Thank you so very much, sir. Thank you so very much, sir. I'm learning a whole lot, and I believe every other person is also learning alongside with me. I think we are going to take the very last question for this session. This person is worried in terms of the multitude of fintechs that we have everywhere. The question says, what role does fintech play in all these? Is it safe to invest via platforms like Care Economy? I've not heard of that. Ladder, Bamboo, and the rest. Is it how safe are these platforms? Should somebody take the risk to put their money on these platforms? What's your opinion, sir?
All right. Now, fintechs, interestingly, are part of the financial ecosystem that we are interrogating now, and also advocating for government to come up with a clear policy and rules and regulations. But the reality of it is that that is the direction the finance is going globally. And I will make it as simple as possible. Fintech runs on the back of blockchain technology. Okay. And part of the work I did for the Central Bank of Nigeria some 2.5 years ago on blockchain technology and cryptocurrencies was to underscore the fact that we need to encourage investment in blockchain technology, but that's the way the world is going. And that, of course, the first use of it that is becoming common to investors is cryptocurrencies. But there are many other uses in accounting, now in investing, and so on and so forth. Now, in insurance, we have insurtech. In agriculture, we have agri-tech currently now. So it's coming to every space where we operate. So there is nothing wrong with investing through fintechs. But for the work we did for the Senate Committee of Banking, Insurance, and Other Financial Institutions 2 weeks ago, one of the things we encourage them to do is to now come with oversight on Central Bank of Nigeria and how to set rules and regulations for fintechs. But I'll give you an example how fast and how rapidly fintechs can grow. If you take OPay, for example, came into Nigeria about 5 years ago. And as we speak today, OPay has over 1.5 million clients. And that is unprecedented in terms of the rapidity of that growth. Not only that, it has raised hundreds of millions of dollars as fresh equity investment. But funnily also, as of today, OPay is a unicorn. It is valued above $1 billion US. So now, what is important here is that you don't put your money into just any fintech. That's the candid advice I will give here. Because as of today, there are no definitive rules and regulations. And I'm saying this on the back of what we are privileged to be involved with as policy advocates, that is an area that the new management of central bank should look into. So, but again, what will I say to you? Will I encourage you to go the way of fintech or come the way of UTL? All right, so that's the way I will put it. So why will I put my hard-earned money into risk with an organization that has no office? Because I don't know where they are. They are just like what we call neobank, N-E-O bank. Neobank means a bank without an office, physical. That's what fintechs are. Okay. So I would rather advise you come to UTL. Thank you very much. Of course, UTL has its own app that is working to make life very convenient for you. So if you can get that on an app of UTL, why take the risk with a fintech? Of course, I'm not demarketing them. I'm just putting the reality of my own interpretation. You know, as what Gen Z described us last week, that I belong to the ancestors. But this particular ancestor is also digital. You know. All right, thank you very much.
Wow. Thank you so much, sir. I think that is about the last we can take for this particular session because we are really running out of time. So in final words, sir, just want you to more like what's your final words to the participants, you know, for the key takeaway, you know, I want to give to them from this session, sir.
All right. Thank you so very much. My final word here is that Nigeria presents an environment for good return on investment. And like I said at the beginning, there are two major things. The first is the house you place your money with. You want to place your money with a house that, you know, aligns with all the very principles of good corporate governance. And that is what you find in UTL as a group, and in particular in UTL as a money manager. Then secondly, the instruments you put your money in, and I'm happy about the questions asked, that you don't choose an instrument carelessly. It's always good to consult your money managers so that you can be guided. They research on all these issues I talked about on a daily basis, all right? And therefore, they are at the forefront of developments globally and locally. So my parting word is that if you must invest in an environment that offers good return on investment and safety as well, that safety part will come from doing that with the right house. And UTL is the best. So thank you so very much.
Thank you so much, sir. Thank you so much, sir. All right. Thank you all for being part of this webinar. We appreciate you. So I will be inviting the Managing Director of UTL Asset Management in the person of Mr. Manny Robson to give us a vote of thanks.
Thank you, Edgar, for giving me the platform to really appreciate our chairman for this insightful rendition. I also want to thank you, Edgar. You've done a very fantastic job in moderating this outing for us. Also want to thank the audience, 58 of us that have joined this presentation. I hope that, like me, you have benefited in many ways from the information that has been provided here. I believe that this is the first iteration of one of so many of this kind of webinars that will be provided by our organization. So keep a date with us another time when you get invited to join the presentation. Thank you so much once again for being with us. We are available and we are at your service. You can call, you can email us with your questions for those that still have more questions to ask. And also, if you want to explore investment opportunities in the Nigerian market, feel free to get in touch with us. We'll be very happy to be of assistance to you. So I thank you and I wish you the very best in all your endeavors. So hope to talk to you again and have you with us when next we host a webinar on similar topics in the future. Thank you, everyone. We appreciate you being present here with us.
All right. Thank you.